Navigating today's real estate market can be tricky. Want to buy or sell a house, finance or insure a house, or stuck with a house and don't know what to do? Florida Talk Real Estate has been your local one-stop real estate shop since 2012. Get the advice you need from your local real estate pros. Here are your hosts, Jim DePola and Johnny C. Live on Real Radio.
Good Saturday morning. Welcome to another edition. It's Florida Talk Real Estate, and we got you for hopefully 2 hours of infotainment. That's what we offer up every Saturday, and it's great to see you out there. 92.1, 101.7, the old terrestrial radio. Thanks for being there. Of course, if you have your free download, the iHeartRadio app. We're worldwide. That's right, global. Doesn't get much bigger than that, y'all. Welcome to the big show. And, of course, we live stream. Find us on Facebook and YouTube. That's Florida Talk Real Estate on Facebook, Florida Talk Real Estate LLC on YouTube, home of a ton of informational chunk videos, plus our live stream on a Saturday. Thanks for being with us right out the gates. You're always welcome to join in, and you can be a part of the show as well. Toll free at 877-927-6969. If you do dial in, the first voice you'll hear, that's the melodious tones of our producer extraordinaire. There's Timothy, my brother from another mother.
Hello, and good morning, gentlemen. Happy to be with you on a Saturday.
Always good to see you as well, my friend. I'm your old buddy, your old pal, Johnny C., your air traffic control. Let's get your starting lineup on a Saturday morning. I haven't seen Ross Komarinetz with Brightway Insurance Juno Beach in a minute. It's good to see you, my friend.
You too, man. Good to be here. Good to be here.
Everything been good in your world?
Yeah, things have been pretty good. I've been running around, so.
Awesome. Hopefully we'll get a little catch up, maybe some pictures. I'm sure there's been some awesome.
Yeah, there was a kind of a big adventure that was pretty fun.
I love to hear that. Good to see you. It's always nice to know that we can lean on some pros like Paul A. Krasker, y'all. Yes, the law offices of Paul A. Krasker. There's a name on there, KraskerLaw.com, and it's always great to have the big dog in the studio. Paul, it's been far too long. Nice to see you.
It has. Yeah. Great to see you. Good to be here.
Great to have you in studio. And of course, our fearless leader. That's 13 plus years now. I've told you he runs a top producing Keller Williams team, the Florida Home Pros team, Keller Williams Innovations. Jimmy D, how you be? There's Jim DePola.
Hey, Johnny. Hey, everybody. Happy South Florida, everyone. Beautiful day. I guess today's going to be the longest day of the year. It's June 21st.
It was yesterday.
Right?
But
I thought maybe 20th? You're right. Was it yesterday?
I always thought it was the 20th.
Yeah, I think.
I always thought it was 21st.
Me too. I thought it was 21st.
Summer solstice.
I went around all day yesterday saying it was yesterday, so I might have been that dummy.
So if we had Mike here, Mike would be Googling it right now. Mike Ralph from the mortgage firm. He's off today, but he'd be Googling it for fact checking us right now.
I feel strong.
It's the 20th.
It was yesterday.
Yes,
it was yesterday. Yeah. I felt like yesterday was a long day. Yesterday was a long day.
It peaked at 10:42 p.m. yesterday.
Oh, did it? Hey, did you guys see that full moon that happened last week? That was pretty amazing.
The strawberry?
Yeah, that strawberry moon was awesome.
It was pretty.
And it was strawberry, too, at least where I was. With those clouds, it was
I feel like I could reach out and grab it. It was
I know.
So ginormous in the sky.
It's almost like one
of course, I might have been peeking about that time.
Yeah, you might have been peeking, too. It was almost like those, what I call them, the movie moons, where they're just so gigantic.
Right.
And they're exaggerated.
Some kid with an alien in his front basket was riding his bike across it.
You could actually see Alice Cramden, from what I understand. It was that big.
It's to the moon.
Wow.
Hey,
that's a really
that's a
clear
pretty
moon,
isn't it? Man. What were you watching when you were a kid?
I saw the honeymooners when I was a kid. Yeah.
I think Ross's was pretty dated, but yours is a dated reference.
Big time. That's old. I don't even think it's in syndication anymore.
Right. For those that missed them both, that was an E.T. and a Honeymooners.
I shot a couple. I shot pool on Jackie Gleason's pool table at Inverary. Remember Inverary?
Sure.
It's a community down in Broward County.
I've heard of it, sure.
I grew up nearby, and one of my kids' friend, his name was Glenn. He was a big pool kid. We were sixth grade, right? But we were really in a pool and loved the movie, right? The Jackie Gleason, The Hustler. And anyway, we used to go over there and shoot pool all the time.
That's cool.
It was pretty cool.
That is cool.
Yeah, it was pretty cool. Hey, and that house was pretty crazy he had down there back in the day. The house he had, yeah. It was very 70s. It was a very 70s house. But we got a lot to talk about today. I am so glad that we have a special guest, Paul Krasker, from the law office of Paul Krasker. Paul's been with us for so long, but we haven't had him on the show, and there's so many things going on. We're not going to get into right now, Paul, but I got to ask you what's going on with student loan situation, because it seems like that whole thing got really topsy-turvy, and I don't even know where we are with it anymore. I'd like to talk to you about that. There's so many people, Paul, talking to us about, is the South, not just South Florida, but is the Florida real estate market crashing? I hear it all the time. And we've always fought the good fight to give out the real information, not the good, the bad, the ugly. And we've been going on the MLS saying how many foreclosures are for sale and short sales for sale compared to all the properties for sale in the MLS. And so we've been kind of refuting any kind of crash right now, but you would be definitely a canary in the coal mine because you have to deal with that all the time. So I'd love to talk to you about that. Ross sent out a message today. Ross Komarinetz from Juno Beach, Brightway Insurance, Juno Beach.
You know it.
Sent me something really good news earlier this week. I said, we're definitely going to talk about that. And then 2 days later, Johnny sends me an email with a text with a article saying, hey, you might want to check this out. I had already saved it to talk to Ross. It's about that True Company, TRUE insurance company. Have you heard of that one, Ross?
Mm-hmm.
They're asking for a kind of a surprising thing from the state right now. So we're going to see if that's even legit, or if it's just an ask, or if that's really a trend.
Hey, if you don't know, if you don't ask, I've always been taught that.
Exactly.
If you already have a no, don't be scared to take a no.
Yeah.
Right?
I've always been a ask for forgiveness
Instead of permission.
Yeah. Instead of permission, ask for forgiveness.
I don't know why I taught my daughter that, like out the gates too. I was like, here's a good one for you. And then I'm like, you're an idiot. Why did you do that?
No,
Thinking I was being the cool guy.
So we do have a lot to talk about. I want to start off though. I love my creepy critter stories, right? The Florida creepy critter stories. So I have a new one that I thought is, I had it. Johnny, can you talk for a second?
Last week it was like Jurassic termites or something. The concrete eaters.
The Formosa and the subterranean termites.
Yeah, concrete eaters, right? You said
merging together into one gigantic.
And the hub is Southeast Florida. Too.
Yes,
like we're like the hub of the nation for the Jurassic concrete eating hybrid termites.
Okay, so Terminex came out. This is my favorite creepy. I actually have like 4 creepy critters, but I'm just going to keep it to this one right now. Yeah, because we got so much to talk about.
But the other one's in the bank.
Terminex, yeah, exactly. Well, we're going to get Shane from Pets. I always say this wrong. Pest Smart with an S before the T.
Right.
We're going to have him come on, and he's going to talk about what he's seeing when he goes out to people's houses. And apparently we have a rodent infestation in South Florida. The people are just calling over that right now. But I want to ask him about all this stuff. But Terminex just did a study where they do an annual report of bed bug infestations. And the reason why I wanted to talk about that today, just real quick, is I'm going out to a trip to Vegas next week for personal stuff. But
You getting this exchange finally?
No, I've read that there's several multi-million-dollar lawsuits against people. People have filed against hotels for being attacked by bed bugs.
Ooh, bring your own bed bugs then.
Oh,
yeah, I know, right? So I was like
Tampa, St. Pete, though.
Yeah, and some of them are in some of the nicer places on the strip where they've had these things. So this study was like, where are all the bed bugs in the country? And of course, they're everywhere. But Florida is kind of ranked up there a little bit. Florida has 3 out of the top 50 metro markets are Florida that have bed bugs. The good news is we have to get down to 26 before you get the first Florida metro. So there's 25 metro areas worse than us. So that's a good thing. Tampa, St. Pete is 26. Orlando, Daytona, 30. And Miami, Fort Lauderdale, of course, 37.
We just spent a weekend in Tampa, St. Pete. When I read this article this week, I said it to everybody. I'm like, good thing we didn't spend a few days there, huh?
Exactly.
Good thing we travel with our own mattresses.
Yeah. Now, I know everybody makes fun of it, but I've actually, I went up to North Carolina once, and the person I was with they got totally attacked by bed bugs,
Oh,
and
it's horrific.
they were sick. They actually they had flu symptoms and stuff. It was so bad.
That was really infested, and
You looked at their back,
yeah,
it was crazy.
Gosh, that's
It was crazy.
bad.
Like the whole back was filled with blotches and bumps and pus and
it's giving me the heebies. And
oh
the
my
jeebies
God.
right
So
now.
it isn't something to mess around
No,
with.
not
Everybody
at all.
jokes around like, don't let the bed bugs bite. It's like, right?
Seriously, though, don't
This
let
is
'em bite.
serious. Don't let the bed bugs bite, right? So just watch out there for bed bugs out in Florida. There's a whole bunch of other stuff. Did you see the sand fleas that were coming up on shore in Central Florida?
Yeah, but that's like a pretty
A
natural
normal thing,
occurrence.
yeah, right? And I never saw a sand flea before. That was the first time I actually saw videos of sand fleas. So
When there's a lot of them, there's another thing that kind of gives me the heebies.
You just
Like,
don't see them. They're like on every time like a wave washes up. They're
They're
Are
under
they?
right
there.
there. Yeah, you
Yeah.
can just
They're
kind
down
of
there.
put your hand down and
I
grab
didn't
one.
even when I saw him, I saw a guy like a
And they're
guy
not really
using
fleas.
a net to catch them to use for bait. Are they hard shelled?
Yeah.
They're a hard shell? Wow, so they're more like a crustacean, like
Yeah,
something
yeah.
like that.
Mm-hmm.
Totally.
They don't really bite or anything, right?
No.
They're
No.
just- right?
No.
They just
Put them
pop
in your hand.
fleas.
There you go.
Yeah.
You feel them little trying to run in
You
your
never
hand.
saw
They
you
are
ever
good
seen them,
bait.
Paul? I've never
Never.
seen a sand flea either. I've never seen one in real life. Missing out on life. Or missing out.
I wouldn't say you're missing
I
out.
don't know.
So so there's a lot a lot going on. Just want to give a couple shout outs. Francis, good morning, and Betty, good morning, and Susan, good morning all. She wants to give out a shout out to Ross and his employee Aaron. They saved my behind this week after another agent let a commercial policy lapse because she didn't run a payment. So I don't know what you did, Ross, for Susan, but thank you so much for helping out. Susan's
Aaron
a big
helped
fan
her
of
out
the
really.
show.
Yeah, Aaron helped her out. So yes, shout
It
out
was
to Aaron. Yeah.
Okay, awesome. And Susan, I hope your dog Hudson's doing better. Last time she reached out to us, remember he had just gotten through heat stroke.
Yeah.
So
Well, hopefully he's doing better.
we helped Paul. We helped Susan become a first-time home buyer, like in 2018 or 2019, and she was a single person who just wanted a place that her dog could have a backyard and enjoy. Right, that's what she was looking for.
Nice.
So we helped her buy the house. And in 2018, 2019, all of her friends, because she's in the contracting business, they're like, what the heck are you doing buying your house now for? The interest rates are high. The prices are high. Everything's high, blah, blah, blah. And now that she's sitting on a whole bunch of equity compared to 2018.
It got a pretty good looking interest rate, too.
Yeah, and a nice
comparatively.
interest rate back. Well, 2018 wasn't that great, but it's still better than today.
For sure.
Probably at least
It's
2 points better.
I was going to say, it's a point and a half.
Yeah. So, but she's done really well. And we talked to her about that on the show a couple months ago. We said, hey, Susan, what do you think about all your friends' ideas about not buying the house? So she's doing great. So hope everything's going good. Thank you, Susan, for letting us know. And of course, you can watch us on Facebook and YouTube all the time live, and it turns into reruns. The other thing is that if you're having a problem with the signal when you're driving around the car or something, we really recommend using that iHeartMedia app. It's an awesome app. It's free. It's so easy to use. Even I can use it. It's Jim DePola approved. And Jim DePola approved. Like you can actually use it and not get screwed up with it, for me at least. And if I can do it, anybody can do it. So iHeartRadio app is a great app because you can listen to us live anywhere in the country or anywhere in the world, actually.
That's right.
But then it turns into podcasts. It turns into audio podcasts. So if you just want to catch us later, drive around and check it out. So
and that app offers so much more to consume. So yeah, do that.
Yeah,
Get that free download.
I'm being selfish and just talking about us, but there's so much.
But if you're like that's not enough motivation, there's a lot to consume. Plus, you can listen to us. So
yeah, there's a lot. You can just get lost in that app and just listen to stuff out of there. So Susan just wrote, "I love my house." So thank you, Susan. I really appreciate that. I hope you have an awesome summer. Now wanted to talk to you something, Paul. It was kind of interesting. I had a seller. He put his house on the market. Well, actually, he didn't put it on the market. This was a very unusual case. He did not want the house on the MLS. I talked to him over and over about it. He did not want it on the MLS. He was saying, if I'm going to do the MLS thing, I want to do it later. But Jim, try to find me a buyer right now. So we signed the documents that way. And I started talking to investors and things like that. And one of the investors went under contract, and we had an inspection period, and the inspection period ended on a Saturday. And they had really drug us through the mud a little bit because they asked for several times for us to come out for inspections. And I went out there for the inspections because I'm the listing agent. And none of them were inspectors. They were like people. One of them had a representation with another real estate agent that wasn't even part of the buyer was a real estate agent, but not the same brokerage and everything. And I was like, they're trying to wholesale this property. They're trying to find a buyer, and they have me showing the property for their buyers that they want to buy. And I was getting kind of PO'd. So I called them up and I said, hey, look, my seller's planning on closing June 20th. He's in the middle of packing and doing everything. If you don't want to buy this house and you haven't found what you want to find or anything, you got to let me know now, because we don't really want to extend anymore. We have other people we could talk to. And they were like, no, just give us, this is on Thursday. The inspection ends on Saturday. So she goes, no, just let us bring one more person Friday. We did. And then on Saturday night, not too late, like 7:00, she sent the release and cancellation signed by her. I was like, okay, she did it during the deadline, but I'm not going to jump just because she wants to jump. I'll deal with this on Monday, right? Weekend, no use to deal with it now. Title company couldn't do anything anyway. So Monday, I made that a priority towards the end of the day to deal with it. And the next thing I know, my phone is blowing up while I'm on the phone with other people, and I'm being blasted with text. And what she said was in the text and the emails, there were text and emails. Hey, Jim, I don't want to cancel the contract anymore. I talked to my business partner. We want to move forward, right? And I thought about that for a little bit, and I called her and she didn't pick up, which is very common with this person. So I sent a text to her saying, before I call the seller to discuss this, I just want to make sure that you're moving forward with the contract, that you're waiving your inspection period and moving forward with the contract. All she wrote back was yes. That's all she wrote. So I was like, okay, I think we're good. But then I was thinking, are we good? So then I talked to a couple of people in my office who were seasoned people just to bounce ideas off of. They had some ideas. I wasn't sure I wanted to use them. So I called the title company. It wasn't our title company. They picked title. So the title company lady said that she knew this investor all the time and that she was very scatterbrained, but she was in production, and that she felt that she didn't need anything more because everybody's moving forward. Then she paused and she goes, just to protect your side, what I would do is I would put together all the emails and texts that you guys went back and forth with, and with timestamps, send it back to her and saying, and showing her that this is what transpired. And I put all that together and sent it to her. And then she sent me a message back. This is all on Monday. And she sent a message back 8 hours after I sent that. So this is pretty late on Monday. I'm sorry, we changed our mind. We want to cancel now. So my seller was like, well, do they have the right to do that? And I go, I don't know. This is a very gray area to me. I can't tell you. I'm not an attorney. I'm not an expert on contract law. But she did waive it. We have it in writing. The title company said that they were okay with it at first, but then just to cover our butt to do the other thing. And now we've been fighting now for a week and we haven't got it resolved yet. I was just wondering, what happens in a situation like that?
A judge would have to make a call as to whether the email and text exchange between you reverse the cancellation.
Mm-hmm.
But I don't think that is the dispositive issue. I think the dispositive issue is, did she, before Monday at 11:59 p.m., elect to cancel? And it sounds like the second time she did it on a timely basis. And unless you had an addendum that was signed that said, buyer hereby waives the remainder of their inspection period, the buyer had 11 till 11:59 p.m. on Monday to cancel.
Mm-hmm.
So if I were the judge, I would turn back and say, give the buyer back their money.
Right, right. That's what we were kind of leaning towards too. But it was very upsetting to the seller. And the reason why the seller was so upset was as soon as we went into contract, his phone started blowing up with investors
Mhm.
saying, "Hey, do you want to get out of the contract you're in and close with me?" And he's like, "Where are these people coming from?" Because it wasn't on the MLS, right? Nobody knew that this transaction was happening other than the people involved. And we confronted her during the week saying, "Are you putting this out?" Because, and then I Googled it and I found 2 ads on Facebook with different prices than what we had it listed for.
Huh.
But when I went back to the Facebook groups to find out who posted those, they wouldn't tell me who posted those posts. So I couldn't tell who put it out there. So anyway, it was a hot mess, but we ended up canceling it, Paul. We ended up doing that and releasing it because he didn't want to pay court costs or anything to go to court. It was a very small deposit. It wasn't like life-changing money or anything. And frankly, the court costs and everything might have ate up more than 50% of the money that was involved in everything. So he just said, let it go.
Right.
But just be careful. And the other thing is that I think the lessons here are not from the seller side, but a buyer. You can't just change rules unilaterally and make decisions like that unilaterally. It's like, hey, I changed my mind. I'm not doing this or not without both parties agreeing. And to make sure that you do everything on deadline. And to be fair, she did turn the thing in on deadline on Saturday night. But it was very disappointing for him because he was supposed to close yesterday.
Right.
Right. And now we're back on market again. So if anybody's looking for a 4-bedroom, 2-bath home, go ahead, Paul. I'm sorry.
Did the seller save the numbers for the people who are calling him as investors?
Yeah, I have all that, and I'm calling them back to find out what's going on with it. But a lot of them were blind, and you know how that is with the blind offers and everything. I want people to go out there and take a look at the house. It's a 4-bedroom, 2-bath home in West Palm Beach. It's got it's either a 2019 or a 2021 metal roof, so the roof's good. And the house needs a lot of TLC on the inside, but it'll be a really nice home when it's fixed up. And we have it priced as a TLC home. So
Sweet.
if you're interested, give us a call. We'd love to talk to you. Retail buyer would be best for that. If we had a retail buyer come in with an FHA 203K construction loan, they can go in there, buy this house at a low value. They would have plenty of money from the construction loan. I already talked to Mike Rao from the mortgage firm to fix up everything they would want to fix up in the house. And they have effectively pretty much a totally renovated home. Probably about 10 to 15%, well, 10% below market value. So you'd have an extra 10% appreciation plus your down payment.
Sounds pretty
So
nice.
it's a good opportunity for a single, for a first-time home buyer. Investors can do okay with it too, but I love working with people that want to move in the house and stay. So I'm really looking for those first-time home buyers.
Absolutely.
We also-
FloridaTalkRealEstate.com, FloridaTalkRealEstate.com on Facebook and YouTube as well. But remember, FloridaTalkRealEstate.com. Know it, use it, love it, share it. You can change your life.
Yeah,
FloridaTalkRealEstate.com.
Thank you, Johnny. Now we have another home I just wanted to bring up during this part is we have a property up in Port St. Lucie. It's a 3-bedroom, 2-bath home. The house needs a lot of work. It's got a leaky roof and the AC is not working right. And it needs a lot of updating in the house itself. But this is the lowest price pool home in the city of Port St. Lucie, not the county, but the city. This house is at $250,000, but it needs a new roof and it needs a new AC and the pool is not functioning correctly and all that's got to be worked on. And then there's some cosmetic stuff to do inside the house. But we have this house priced at $250,000. Okay, 3-bedroom, 2-bath with a pool. If you used a 203K construction loan and got $75,000 from the loan, you could definitely put on, I checked out all the numbers, you could put on the roof, you could put in the new AC, you could resurface and fix the pool if it needs mechanicals, and you still have some money left over to work on the inside of the house to do some projects there. And fixed up, that house is definitely worth $385 to $405. So if you got 325 into it and it's 3/4 fixed up, you've done very well, and you have a lot of equity in that home. And it's a great neighborhood on a corner lot with a fenced yard.
Nice.
So if you're a first-time home buyer or a buyer and you complain that there aren't homes out there, this is a creative way to get into a home that you can afford by buying the fixer-upper and putting the sweat equity into it.
Yeah, and if you can get the loan to where you're absolutely set up to be able to do all that, get that equity done.
Yeah, it's so nice to have the construction money in your pocket,
Yeah.
ready to go to do everything.
Truly.
And Mike Rao from the mortgage firm is an expert on those construction loans. It isn't just FHA. There's a VA construction loan, a conventional construction loan. They're all there for you.
I love it.
Yeah.
We're going to do a little reset.
Yeah, let's go ahead and take a little break. On the flip side, the first thing I want to talk about, because I've been biting at the bit, is Paul. What the heck is going on with the student loan programs and everything? And student loan, I mean, it's been so topsy-turvy for the last year and a half. And then right after that, we're going to roll right into Ross Komarinetz. He sent a really nice text. I was like, wow, this feels so. When was the years that we were telling everybody if you wanted a discount on your mortgage payment?
Oh, like 14, 15.
It was an email
16.
that felt like 2014 through 2016. So it's actually a little bit of good news. So we're going to, on the insurance, we're talking about good news and insurance. So we're going to talk a little bit about that on the flip side.
Excellent. We got a lot to get into, plenty of time. And of course, you're always welcome to join us toll free 877-927-6969. If you got a question, comment, concern in the world of real estate, want to dive into the conversation at hand, don't be shy. Of course, if you're not comfortable on the radio, I totally understand. Always remember, you have access to the entire team. I'm talking pros, experts in their field. You can get them all at floridatalkrealestate.com, your one-stop real estate shop. You got the hotline. If you like to pick up the phone, you can do that. 888-973-7828. You'll find that number at floridatalkrealestate.com. Fill out the contact sheet, whatever your method is. Just make sure when you're buying a home, selling a home, stuck with a home, you don't know what to do, you got people that you can lean on, people that you know you can trust because they are great at what they do. Good at what they do? That's nice. Great at what they do? Even better. Know it, use it, love it, share it. It's floridatalkrealestate.com. We're back in 4 minutes. Florida Talk Real Estate right here on Real Radio.
The bad news, the brain isn't all that great at hearing stuff and remembering it. The good news, you can watch us too. Like and follow us on Facebook, Instagram, and Twitter at Real Radio 92.1. Here's what's happening with the weather on Real Radio.
I'm CBS 12 meteorologist Charlotte Carl. We have a hot afternoon underway. Temperature is getting into the upper 80s, lower 90s across the area. Be sure that you are wearing your light-colored, loose-fitting clothing, taking frequent breaks out of the sun, and wearing your sunscreen. Overnight, a very modest cool-down, only dropping us down into the lower 70s with showers slowly around midnight.
This report is sponsored by Discover. Guess what? Discover's accepted at 99% of places to take credit cards nationwide. You heard right, 99%. If you don't think so, maybe it's time to face facts. You're stuck in the past. Based on the February 2024 Nielsen report, learn more at discover.com/credit card.
Hey, it's your boy Johnny C here, host of Florida Talk Real Estate. They're tops when it comes to helping people buy and sell houses. But Florida Talk Real Estate is so much more than that. For 5 years, I've watched these guys help thousands of our listeners with any real estate need. They couldn't do it without their sponsors, who are experts in their fields. Check it out. Jim DePola, powered by Keller Williams Realty. Their team specializes in helping people sell their house for top dollar, and buyers get great deals on the purchase of their home. That's what they did for me and my family, and I couldn't be happier that I hired them for my real estate transaction. Mike Rao from the mortgage firm is one of our favorite guests on the show, and he is the mortgage guy. Whether you're looking for a refi or a mortgage to purchase a new home, Mike Rao will get you the answers you need. The mortgage firm is licensed to do loans in Florida, Alabama, Tennessee, and Georgia, and they have local offices that cover all of South Florida. So if you're thinking about a refi or a new mortgage, go to the mortgage guy, Mike Rao, and find out what he can do for you. The Mortgage Firm, Inc., NMLS 189233, Florida license MLD 78, equal housing lender. The law office of Paul A. Krasker has been specializing in real estate law for nearly 25 years and has the professional team you need. Upside down with your house, Paul's team can help you conduct short sales, loan modifications, even if you're behind on payments. They also help you with foreclosure defense and bankruptcy. They can even help you get a student loan modification and repair your credit to get the score you need. Paul's full service team has helped thousands of our listeners, and they can help you too. Trident Title LLC is the largest privately owned title company in Florida. When you need a title company to complete a refi, home purchase, or sale, Trident Title has got you covered. Not only do they offer competitive pricing, Trident Title has attorneys on staff to make sure if you have bumps in the road declaring title that you can get the job done. Beware, not all title companies in Florida have attorneys on staff. Trident Title does and complies with all the new federal regulations released last year. Ross Komarinetz, owner of Brightway Insurance, has been helping our listeners get great rates on homeowners insurance plans. Haven't checked your homeowners insurance policy in a while? This is a great way to help reduce your monthly mortgage payment. Ross can also help with renters and auto insurance. Ross is only a phone call away and can usually get the answers you need same day.
Call Ross today at 561-425-6228 or drop by his office at 873 Donald Ross Road in Juno Beach.
So now you know why I'm happy to be part of the Florida Talk Real Estate Show, the longest running real estate show in Florida. And all these sponsors are just a phone call or a click away. Just call 888-973-7828. That's 888-973-7828. Or go to floridatalkrealestate.com. That's floridatalkrealestate.com. And don't forget to use the most accurate search engine to find your new home or ask for a free home valuation because floridatalkrealestate.com has you covered. That's floridatalkrealestate.com.
This is Real Radio 92.1 and 101.7. Real talk for the Palm Beaches and the Treasure Coast. This is Florida Talk Real Estate with Jim DePola and Johnny C. Got a question for the show? Call us live at 1-877-927-6969.
Yeah, that's it. 877-927-6969. Jimothy's our producer extraordinaire. How the phone lines looking over there this morning, my dude?
They're looking empty is what
Yeah.
they're looking like. So
I don't think they're working.
No,
they do.
That one's working.
Okay.
That one's working.
All right.
Yeah, you got plenty of phone lines, people.
Excellent.
Light it up.
Well, if you have a question, a comment, concern in the world of real estate, if you'd like to dive into the conversation at hand, you're welcome. We are live on this Saturday. It's the 21st of June, known as the second day of summer. Jimmy D. Johnny C, that's me. There's Jimothy, our producer extraordinaire.
Good morning, gentlemen.
And always a pleasure to say good morning to Ross Komarinetz. He's with Brightway Insurance, Juno Beach. What's up, Ross?
Not a whole lot. Good to be here on this.
And by the way,
Saturday.
you can see Ross. He's got a camera pointed in his face. Join us on Facebook and YouTube. We are live streaming. There's Ross right there if you're with us.
Hot Ross.
He loves that, by the way.
I know.
That's some of his favorite stuff. That's callback from long ago.
I know.
Yeah.
It's been a while.
Ringtone.
I can't believe you were able to find it.
You make him so happy. And if you don't hear the sarcasm, let me crank that up a little bit. He makes him so happy. Paul Krasker's with us as well, and you find his name on the sign of the law offices of Paul A. Krasker, KraskerLaw.com. Always good to see you, my friend. Welcome in the studio, Paul.
Thank you.
And of course, Jimmy D is our fearless leader. 13 plus years now, we've told you. He runs the top producing Keller Williams team, the Florida Home Pros team, Keller Williams Innovations. Jim DePola, it's Jimmy D. How you be?
Very good, Johnny. We did actually get a kind of a call today. We got a request for a question from I just lost it, Jackie. She just sent us a message from Facebook. She goes, I have real estate needs, maybe possibly need a reverse mortgage. So I just want to go over reverse mortgage very quickly. Mike Rao from the mortgage firm isn't here. One of my relatives actually used a reverse mortgage through Mike. When they did, at the time, this is about 5-6 years ago, I thought reverse mortgages were scams because I saw a lot of stuff on the commercials saying, were you scammed by reverse mortgages and blah, 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 and all that. But Mike educated me that there are legitimate, real, good reverse mortgages out there, but you got to get a reputable person to work with you. We have a lawyer in the house, a real estate lawyer, Paul Krasker from the law office of Paul A. Krasker. Am I wrong about that, Paul, that sometimes reverse mortgages, well, there are legitimate ones out there and they can be a benefit for the right situation.
That's correct. The real problems occurred in the 70s and 80s, and we've created a whole bunch of regulations that requires all of the mortgage companies to use very specific forms and go through very specific criteria. So I would be surprised to see too many unscrupulous residential mortgage companies offering reverse mortgage.
Oh, well, that's a good sign, because once I hear scam, I got it in my head forever. It's like scam, 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 scam. So it got better. So Jackie, we'd love to talk to you. Excuse me. We'd love to talk to you off air. All you got to do is call 888-973-7828. We'll get you over to Mike Rao from the mortgage firm. I'm not going to ask any personal financial information because I don't need that. I'm a realtor. Mike will be the person you talk to that's going to share all that information. I can tell you that my relatives, the reverse mortgage was very helpful to them for what they were trying to achieve. So hopefully we can get you the answers you need. And if the answer is no, that's okay too. You know,
That's
if
right.
this isn't a good product for you, I know Mike will be the first one to say, hey, I'm not sure you want to do this. So you're in good hands with Mike. So just give us a call. And you could always go to our Florida Talk Real Estate page and go to the contact form or anything like that if you want to.
FloridaTalkRealEstate.com.
I know Jackie's come in and listened to us a bunch of times. So
Excellent.
looking forward to helping her. So, Paul, what the heck is going on with the student loan programs? We have been talking about it for years and years and years, and we used it so many times to help people. I don't know how many people we helped from the show through Paul Krasker, where they were able to get $500, $600, $800 month payments, student loan payments down to zero, sometimes $50, $100 from $800, like, you know, because it was all on your ability to pay. And that program, that thing that always bummed me out about that program, I still didn't even know what that program was called. I just called it the student loan program because you had taught us way back like 10, 12 years ago that they approved these student loan programs to help people for affordability, but they Congress didn't allow them to advertise it. Remember that, Paul, back in the day? Am I wrong about that?
Correct.
So nobody knew about this program. It was like the secret program. And Paul was out there, you know, yelling to the world, hey, if you need help, there's all this great help. And then we started putting it on the air. And the results that we saw, Johnny, the results we saw were
Some
really
of the stories
amazing.
were just,
Were really amazing.
unbelievable.
Uh,
And I'm sure-
Almost all of the initial people that we signed up under the public service portion of the forgiveness programs,
oh, they're probably done now.
they're done.
Wow, I
that
just got a
is-
little
me
chills
too,
right
me
there. We
too.
don't even know who we help.
So
there's a
the
bunch of
people who
there.
stayed in the public service for the 10-year period, the total amount was completely forgiven. Now they had a tax liability because it was forgiveness of a debt,
Wow.
but
Yeah,
even
but
so, you'd rather
pay
pay
the taxes than the whole bill.
20% on the forgiveness amount than actually pay the amount back to anybody.
Absolutely. Can they give you a payment plan on the tax liability?
you can ask the IRS for one, that's for
right?
sure.
Yeah, they'll give you a
Yeah.
little schedule, right?
So the public
Hopefully.
service student loan, the way that worked is if you were a public service employee, you would get into this program. They would base your payment. They wouldn't care how much you owed. It was all based on your ability to pay, based on your income and some other criteria. Paul knew all the mathematics. And then as long as you kept that payment current for 10 years, and of course, rechecked in every year to say what your new income was. If you got a raise, you're going to pay a little bit more money. If you lost your job, you might pay zero that year, right? But then the next year, if you get a job, you're paying again.
Well, so that was probably the hardest part, right? Was they had to in a sense, correct me if I'm wrong, reapply every year, right? Readjust their numbers, and it was required. You had to do that. It wasn't set it or forget it. So I'm sure your office would reach out to folks, Paul, I would imagine, and be like, hey, just a reminder, this is your obligation, but hey.
So we did two things. Number one, we said, we'll do the renewal for you if you pay us a fee. And I forget what it was. I think it was like $240.
It was $250. I remember. Yeah, roughly. Yeah.
249.
Yeah,
I
so
was going to
little.
say, but
Yeah.
yeah.
So little.
And We would also, because we didn't want people to fall out of the program, send them a reminder 60 days before their time period was up in the year. Even if they weren't going to go with us, we just sent an auto email to them to say, hey, you said you were going to do this. You need to do this. You've got 60 days. You're going to lose all the prior benefit. Everything that's sitting in your forbearance account is going to spring back into a liability to you if you don't do this. So most people would call us up and say, yeah, you better handle this. Here's my credit card. Or they would say, thanks for the reminder. I'll take care of it myself. Some people didn't do it. Some people didn't do it right. The worst one was 9 years into a 10-year program. I think it was a nurse, takes a job in a private sector. Too good a deal to pass up.
Oh my God.
And had then all 9 years of her forgiveness
Go back
into the thing. So she must have moved for like $10,000 raise, probably. I don't know the exact number.
Right.
But then she got $36,000 plus interest accrual that came back into her liability.
Interest accrual for 9 years.
For 9 years.
Interest accrual.
So probably $45,000
Oh my gosh.
for a $10,000 jump in pay is a bad financial move.
And we had another person that called in.
What do? Do you go, I really love the job?
I
but you
will
can't
accept this
pay
in a
me that."
year. I
Yeah,
will accept it.
you're offering me way too much money. You
Yeah.
know?
It's they just needed to stay in the public service
one more year.
for one more year, and accept the job, but say I can't do it until next year. Can you give a temp till then? And if not, just look for another job a year from then.
Yeah, and you were saving so much. Most of the people were paying pennies on the dollar compared to what they owed.
Yeah.
And it was all based on your ability to pay. I love the program. It was a great. I don't know. I'm talking to past tense. I don't know. We're going to find out in a little bit. But at the time when we were using it all the time, it was great. It was also a great way to help people with their mortgage payments for when they were buying a house, because by reducing the amount of monthly payment you're paying, that's one less debt or lower debt that you would have for your debt to income ratio.
Right.
So we would work with a lot of student loan problems with Mike up front, just so they can get a better loan. And they would come over to Paul and they would get all their stuff done, and that would help Mike get them a better loan, either at a higher price or better terms, things like that.
Yeah.
Now, we did have another example like that, Paul, and I wanted to bring it up for people, is that Daryl and Amy, who had been with us forever and ever, and they've done so many deals with it, bought houses, sold houses, moved up to South Carolina recently. And he called me when he's in South Carolina. He goes, hey, Jim, our student loan payment, Amy had been paying $0 for like 6 years, $0 on her student loan debt, which was approved by that student loan program because she wasn't working. She was an at-home mom, and she was studying to be a paralegal, I think, at the time. So anyway, he called me up and he goes, our payment jumped up to like $800 a month. My first question was, what does Paul have to say about it, right? Because I knew they were with Paul. And they go, we didn't use Paul this time. And I'm like, Daryl, why wouldn't you use Paul? I mean, he's done this over and over and over for you. And I kind of like chewed him out a little bit. I love that guy, but I was like, come on, Daryl. So he went back to Paul. And I was like, I hope this works out. And what their problem was, I remember the way they reported their taxes. There's a way to report the taxes correctly, which if you do it incorrectly, you're going to be paying more money. So they didn't turn in their taxes correctly. Paul corrected it according to Daryl, and then they went back down to zero again. So you were able to get them out, but they almost got in big trouble just because they didn't want to use Paul for that re-up. I'm like, come on.
It's a convenience. It's a service of convenience. And we put it in every agreement we have so that nobody can ever tell us that we force them to do it. But you have so many people who get the information from us and then try to do it themselves and then go to their mortgage broker. And the mortgage broker says, yeah, sorry, you're not in a forgiveness program. They just reduced your payment and tacking it on to the back end. But, I can't, and because the key for a real estate radio show is how this impacts real estate. These people were able to get from a $800 a month payment to a zero payment. If you just call into the Department of Education, I don't care what they tell you, they have the servicers answering their phones. That's not an employee of the Department of Education. That's a servicer. And they have no incentive at all to give you a correct forgiveness program. So they just tell you, oh, yeah, we'll reduce your payment.
Sure.
But they don't put you in a forgiveness program.
Right.
They just add it on the back end of the loan.
Yep.
But you feel good about it because now your monthly obligation's all down to where you're like, oh, that's
beat
great.
Paul out of his
I didn't have to pay
$800 or
a
whatever
couple
it
$100
was.
Yeah.
It's disappointing, but then they always end up having to come back to us because they didn't get into the right program and they're trying to buy a house. And now we get to go back in and say to that same servicer, hey, that guy you scammed? Well, we're on to you now and we're filling out the program correctly. And you still need to give us a zero payment or a $32 payment. And now it needs to be part of the forgiveness.
Yeah, exactly. And that is a major difference. I mean, if you don't understand the night and day difference between where they settle in with the offices of Paula Krasker or somebody that puts them in that forgiveness versus just going through the servicer and having them massage it to where you feel good, that is a vast difference.
And there could be some really quality people who are answering the phones for these servicers. We just haven't met them yet.
It might be there. We haven't been that lucky.
But Mike would get a file and the client was thinking, great, I've got an extra $800 a month that I can put towards a mortgage payment now. And he'd have to go back to him and say, I don't know what you did, but you didn't do it right. And
so are the programs still out there anymore?
Oh, yeah.
So they're still there, right? So you can still use them all the time, right?
The programs are still there. The difference that happened just recently is that they stopped the forbearance that came during COVID and was extended every year thereafter.
Mm-hmm.
So, all these people who hadn't made a payment in 4 years, 5 years, are now 4 years, are now having to make that payment. Well, the expression use expands to capacity.
Mm-hmm.
If they didn't have a student loan payment, they were spending it on something else. So when the student loan payments reset and they gave people 6 months notice to say it's going to start, I think it was May 1 or June 1, whatever it was, most of the people didn't have the money.
Does it just turn on and you just owe your monthly obligation again? Or does it turn on and you owe this big balloon payment and then you're caught up? And then which of the,
how does that work?
Forbearance, I know through like hurricanes and whatnot, we looked into it for me personally as like a test subject, a guinea pig on the show.
Mm-hmm.
And it sounded great for the mortgage payment, but the reality is when you got out of the forbearance, you had to catch up in one big nut, and then you got back good. Was it the same way for the student loan?
So no, the forbearance was holding your number as it was.
Just pauses. Hit a pause button.
But now,
no interest.
Any money that you're not paying is accruing interest on the back payments.
If you did the forbearance program and you're in that situation where you can't afford the payment now, can you go into these programs as long as you qualify, the programs you use that we've used all the time?
Sure can.
So can we just explain, because we haven't talked about this in a long time. So there's a lot of people here on the show who haven't heard this before. Could you just go over basically, I'm going to let you do because I know you know it better. Like the best 2 or 3 programs, the public service employee, the non-public service employee kind of program, and the difference between the two.
So there are 4 programs that are set up. They're all basically pay as you earn. So, we evaluate them and say what your payment is based on your income and family status. So if you're a single mom with 3 kids, you can afford less than somebody who's a married couple, both employed with no kids.
You mind if I ask questions as you go?
Go ahead.
Does your debt come into play, or is it all about your income?
It's all about your income.
So your irresponsibility about your debt doesn't come into play.
Right. You can't load yourself up with gambling debts and then say, "Oh, sorry, I can't pay my student loans."
Right.
So continue with the program that you were talking about.
So there are 4 types, and those are available to everybody, whether you're in public service or private sector. The public service, the benefit was you take a 20 or a 25-year student loan that's supposed to be repaid over that time period, and they consolidate your loan and make it a 10-year loan. And if you stay in public service for that entire 10 years, they forgive the entire amount.
So even though you might be paying $10 a month on $50,000, I'm making it up, but $50,000 of student loan debt, after 10 years, if you only paid $10 a month every single year for 10 years because you reapplied and everything, that's it. That's what you were supposed to pay. And all the rest of that payment is, quote, forgiven.
Correct.
Right? Okay.
100%.
You have a tax obligation.
You have a tax obligation at the end of the day, but
you're winning.
You won big.
You're winning.
You won big.
Yeah.
Say thank you.
Yes, exactly. Yes.
And so that time period is critically important. And these are for people like teachers, nurses, people who aren't making huge numbers. Now, firefighters, policemen, these kind of employees, public service employees, government workers, they would qualify up front. But the firefighters and the police, because the overtime pay and all the other things and how you rise up and over a period of 10 years to get to a decent salary, at the end of the 10 years, they weren't saving as much as they were at the beginning of the 10 years. They were still saving something, or even if they weren't saving something, they still had an incentive to stay in the program because those first 4 years where they saved a lot and their forbearance account was so large that you don't want to get out of that program.
Like that nurse situation where she made the mistake.
Exactly.
Yeah.
Exactly.
Well, and even in my head, even if you're not really saving a lot every month, if you have 20 years, you can cut your 10 years off of it. I mean, it shouldn't always just be about what you're saving every month, especially in this circumstance. That if you only have 10 years left on your loan and you're not saving every month, well, you're not really doing that great. But I would imagine in most situations, even if your savings depletes as you go through, you're still really crushing it.
Yeah.
And what are the other programs? If you're not a government worker, what are the other programs that are available to you?
Same programs, same qualifications, same criteria. And we have 10 questions that we can ask. And if you tell us the answers to those 10 questions, we can give you to the dollar, almost to the penny, what your savings is going to be before you apply.
It was awesome. We used to say on the show all the time, and it still counts today. 10 minutes, 10 questions. And Paul would always say, not 10 minutes. Like he can find out faster. So here's the thing. It's that simple. If you think that I want to continue, Paul, but if you think that you have student loan debt, you just want to figure out, man, this has been hanging over me for so long, or all of a sudden this is coming back to rear its ugly head and I'm not ready to deal with it. All you got to do is give us a call. It's so simple. We get you over to Paul Krasker, literally 10 questions, less than 10 minutes, as long as you have all the information. I tell you what you should have so that when you talk to Paul, you have all the paperwork you needed to give him. And what he's going to want to make sure is what your reportable income is. He'd like to know what type of loan that you have, even though he could look that up in a portal. He'd still like you to have that. Like if you have a little checkbook stub or whatever of the payments that you got, payment stub book or something like that, or something, just so you have that information. And is there anything else besides those 2 things?
No, and just want to remind you, it's a free consultation.
Yes, it's free.
It's a money back guarantee. So if we don't get you the savings we tell you, you don't pay us a nickel. We give you all your money back.
I want to do a little asterisk there, though, because we've gone through, so many people gone through this, and almost everybody gets tremendous results. But if you're saying on that call to the student loan department with Paul Krasker, and you're saying that you make $56,000 a year, but they find out that I'm making these numbers up because I don't know what matters, but you're really making $90,000 a year, then that quote that they're giving you over the phone wasn't accurate because you gave them inaccurate information. That's why. So the information has to be accurate that you're giving them.
Yeah, it's going to be verified, right? I mean,
people get crazy though. They think, "Hey, you told me," and I'm like, "Well, you gave us the wrong information. What are we supposed to do?
You lied,
about
so we
that?"
lied. Yeah.
And that's, people don't intentionally.
No.
Some people probably do, but most people don't intentionally tell you. But what the difference is what's your gross income versus your net income.
Mm-hmm.
And people were saying, yeah, I make $3,000 a month. Well, you really made $4,000 a month, but you were withholding $1,000 towards your tax liability, and the government goes on that $4,000.
Mm-hmm.
So, yeah, it was a little bit less of a savings, but most people are usually pretty happy, and we tell them the revised number before they move forward.
How are you able, just so people, I know the answer to this, but I'm asking for regular people, how can you know, as an attorney in West Palm Beach, real estate attorney in West Palm Beach, to know to the penny what their student loan payment's going to be based on the information they give you?
We have the government algorithm.
Okay, so it's almost like plugging it into a calculator, a student loan
Correct.
calculator based on the federal government.
We know all 4 of the programs. We run you through all 4 of the programs to figure out what the best one is. The reality is we only probably run 2 to compare to, but we know what you're excluded from, what you're included in. And we give you the number up front. And the neat thing from a client perspective is if they were making their regular payments, there is no expense for our services. And the reason I say that is we're allowed to ask for a 90-day forbearance when we start to sign you up. So the first thing we do is say we want a 90 days forbearance so that their payments stop for 90 days. And our fee will absolutely be less than those 3 payments. So they're saving money by using us. They're not harming themselves because we're putting them into a forbearance program so that those 3 payments that they technically missed get thrown into the back end forgiveness, and they never make them.
Right.
So there's no cost to our service as long as you are current. Now, the people who weren't current, who weren't paying anything and were continuing to accrue, yeah, they have to come out of pocket for our fee to get it done.
Because they're not able to stop, they're not able to execute the forbearance for 90 days because they're not current.
As the government would say, forbear what?
Yeah, right. You're not paying us anything. What are you forbearing? So this program is an awesome program, guys. I don't know how many people we've gone through this system from just calling this show. We've helped out so many people. There's so many people we don't even know that we helped out.
Is there any way of having an understanding of how many people are in forbearance through COVID on their student loan payments? Is there a guesstimate, a number?
So, no, I don't know that there's, I'm sure there's a number out there.
Yeah.
I haven't focused on it. And we were so disappointed because the original forbearance, I kept telling people, you're missing the point. The government has given you a window where they're forbearing, but they're not putting it into a forbearance account that's going to be forgiven. Now is the perfect time in 2020 or 21 or 22 or 23 or 24. If you just got out of school and you're still struggling for a job and taking a low payment job, knowing that you're going to have a 10-year ascension into a well-paying job, now's the time to talk to us. Yeah, you don't have to make a payment, but you should be in a forbearance program that has a forbearance at the end of the day.
Add those years up.
And if you added those 4 years, especially if they were in public service, they'd be halfway to complete forgiveness. Right. Now, the people who didn't come to talk to us and didn't do it through somebody else or on their own, they're no closer to getting done. And they're going to have 20 years at the same number that they had 4 years ago.
The good news is they still have the same opportunity,
Right.
to go to floridatalkrealestate.com, get with the law offices of Paula Krasker, KraskerLaw.com, get an understanding if one of these programs work out for you. Like you didn't miss the opening, you just missed the best of your opportunities.
You just
sadly.
be 4 years late, but
your
it's better late than
wasn't
never.
great, but you can fix that. You can. floridatalkrealestate.com. You want to do a reset or you want to plow through?
Do you mind if we plow through, Jimmy? You sure?
Yeah, go ahead.
You sure? Okay, cool.
Let me just let everyone know, floridatalkrealestate.com, your one-stop real estate shop. I'm talking about pros, experts in their field. You get them all. The one-stop real estate shop that is floridatalkrealestate.com on Facebook and YouTube. Consume, share. You never know. You might change lives, including your very own, with floridatalkrealestate.com and the pros of the one-stop real estate shop.
Thank you, Johnny. Hey, Paul, it was funny. We were going to talk something similar to this. Magali, who's a big listener of our show on Facebook or YouTube, she had a quick question where she says,
just real quick, because I didn't do this
sure,
either. If you'd like to join us, if you have a question about student loans, I got Ross Komarinetz in studio as well. Insurance questions, of course, with Jim here. We got lots of pros. If you have a question, comment, concern, don't be shy. I got an hour remaining on this Saturday, the 21st. We're live, 877-927-6969. I'll say it again, 877-927-6969. Thank you, Jim.
Thank you, Johnny. Hey, Magali is asking a question, Paul, and this kind of gets into something that we had talked about, maybe talking about on the show. She says, I know I should know about this, but I don't, and I'm a little embarrassed to ask. You should never be embarrassed to ask anything. But can you sell a house to a relative, for example, for $100? And what are, if any, tax implications for both parties if you do that? So this sounds like it's turning into like quick claim deeds where people transfer properties for $100 or $10. They do the ladybird deeds and stuff like that. Paul, how many times do you, because you used to own Trident Title and deal with closings all the time, how many times have you dealt with people where they're selling the house and then all of a sudden they give you this written piece of paper on a napkin that says, I bequeath my house to this person or whatever. Yeah, right. And it's literally on a napkin, which I've actually seen before. And they think that it's totally fine if they did that. And then there's no going to be any kind of legal questions or tax implications about it or anything like that.
Yeah.
So so first of all, just to answer Magali's question, if somebody sells, let's say you were selling your house to me for $100 because I'm your relative, and really you're just trying to transfer the property to me. Are there any big tax implications about that or anything for either party?
There are.
Mm-hmm.
So the seller is going to have a basis in that property, whatever they bought it for, plus any capital improvements they put into the property. Mm-hmm. So let's say you bought it for $50,000 and you put $20,000 in. Your basis in that property is $70,000. And if you don't have a mortgage on the property and you decided to basically gift it to a family member or sell it for $100, the seller is going to have a loss associated with that of $69,990 or $10 or $900 if it's $100. And so that's a loss that they may or may not have an offset of gains. If they do it just as a gift, then they've exceeded their annual gift tax allocation. They're going to have to file a gift tax return and use up some of their lifetime credit. Now, the lifetime credit this year, I think it's around $18 million. So
you're not going to run out.
Some people will.
Yeah.
But yeah, you can file a gift tax return. You don't have to pay anything to the IRS, but it acknowledges that you've used up, whatever that number is, $69,900 of your gift tax, so that you've now given somebody else. Now they're going to have some interesting situation as well, because
the new owners, if you will, right?
The relative that you deeded the property to. That relative, they're going to be at their basis is going to be $100, what they paid for the property. when they go to sell it,
Oh,
their gain, and not a bad problem because they didn't pay any money for it, they're going to have to pay capital gains on the entire amount.
on the entire amount because there's no basis there.
Now, if it's their personal residence,
Mm-hmm.
they get a $250,000 credit towards their tax liability.
Mhm.
So if it's a $70,000 house and they sell it 2 years later for $100,000, they'll pay no gain as long as it was their personal residence and they hadn't sold a personal residence and
3 years, or
2
something
years,
like
the
that.
last
Yeah.
5,
Yeah.
and etc. But the other thing is, I get people calling all the time to say, "Well, I'm going to deed this, quit claim it over to my sibling, or my parents are going to quit claim it over to me." And I say, "Why the quit claim?" And they say, "Well, I'm not going to charge any money for it. I'm just going to give it to them." And I explain to them, what you really mean is you're not charging them any money, but I think you do want to give them a warranty deed as long as you got a warranty deed in your favor. And the reason is because title insurance.
Right.
If you do a quitclaim deed, it voids out the existing title policy.
Hmm.
But if it's a family member and you do a warranty deed, then the title insurance may still survive and apply for the grantee, for the buyer. So
How much does it cost for people to come in to meet with an attorney to do this the correct way? And the reason why I'm asking, everybody thinks it's going to be thousands of dollars. So they don't want to come in because they're like, all I want to do is say, here, I want to give my kid the house. I'm just going to go to Office Depot, go get a quick claim deed form and fill it out. Because they're terrified of how much money it's going to cost to go through that process with an attorney. It's not that expensive, right?
Yeah.
For the protection you're getting.
we charge $450 to draft the deed, and we charge usually $50 if there's no mortgage on the property. If there's a mortgage on the property, there's documentary stamp tax that's due and the amount of the outstanding mortgage balance.
But that's a cost everybody has to pay. That isn't your cost. That's a cost that's built into it.
So we charge $450 plus $50 to record, so $500. But here's what happens, and I'll give you some common mistakes that people make when they go to Home Depot. Or Home Depot, Office Depot.
Yeah.
They probably have it at Home Depot. too.
I think they do.
Aisle 7.
Yeah.
Staples really has
Right.
Staples.
Right next to the plumbing supplies. Yeah. So, so
you know.
you get people who make mistakes on the legal description. They go to the property appraiser's office and they look at that short form legal description, and they don't type out the full legal description that was on their original deed into them. So they can make legal description mistakes. They can make mistakes on the granting of the interest. So, if you have 2 kids and you're putting it to the 2 kids and you don't clarify whether it's with rights of survivorship or as tenants in common, you could be hurting your family for years to come. Rights of survivorship, if it says that on the deed, then if you have a son and a daughter, and it goes to both of them, if one of them dies, the other one gets the whole property. And so if you have a son and a daughter and they both have 2 kids, I think your intention is to give 50% to each of them. And if one of them passes, it goes to the person who's passes kids.
Right.
So that it still says 50%. But most people put nothing in there. And if you put nothing in there, it's tenants in common. And so we've had a lot of circumstances where it was 2 brothers and one of them passed away, and or they'll say, they'll say nothing, and one of them passes away, and it goes to the brothers. They didn't have kids, but it goes to the brother's widow, and nobody in the family liked her. Nobody in the family wanted her to have any interest. In that circumstance, they would have done rights of survivorship. If they had talked to somebody and understood the issue, they would have come back and put the right language in the deed.
Another thing that I think is a big mistake sometimes I see very common mistake is not putting the names correctly based on the title, right? So let's say that mine is James C. DePola, right? And I have a space between the I and the P. I'm just making it up. And then somebody puts down James DePola, no space between the I and the P, no C. But my title shows James C. DePola with the space. Is that going to be a problem?
It is a problem. The question is, what's the remedy? If you're working with a good underwriter and it's clear what the intent was, we could do an affidavit and we can fix that via affidavit. But if it's not clear and the underwriter that you're working with is a tougher underwriter, they might require you to file a reformation action and you have to file a lawsuit to correct the deed.
And what happens if that person passed, right? Let's
Then
say
you
that
have to
person
file
passed.
a probate and
Right.
then a reformation action.
Right.
And
hurry
that's
up and wait.
that's a $15,000 mistake.
Yeah. So the reason why I'm bringing this up to everybody here listening to the show, we know that people do this all the time. There's always needs for transferring property within family members. Divorces happens, death happens. People just do it because they have properties that they want to give to their relatives. Don't not use an attorney, a real estate attorney, not just any attorney too, because some attorneys, and I hate to say this, but some of the attorneys that do this stuff, they don't do it to the standard that, let's say, Trident Title would want. And then they have a big problem later because the attorney didn't do it right. You need a real estate attorney, right? The one that understands it, not some criminal offense attorney, and nothing wrong with them, okay?
Right.
But some criminal offense attorney, you're not going to hire them
Not
to
their
do real
expertise.
estate law.
If you get a DUI, don't call me.
Yeah, don't call Paul, right?
Paul may have a guy. Be like,
Yeah.
here,
So-
call this number.
So please save yourself and your family a lot of headaches, future headaches and everything. Spend a few $100, get an attorney to do everything that needs to be done. That way you can feel nice and safe. And if anything happens and your family has questions and let's say you passed, all they got to do is go back to the attorney that put everything together and go, hey, Paul, you did this for us 5 years ago. Can you tell us blah, 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 blah? And they're going to be able to help you. Please don't go. You're bringing a gun to a knife fight when you do this stuff by yourself. And the thing that's so frustrating to me is when you're telling people it doesn't work well. I'm sorry. When they said it doesn't work well, and you go, I'm sorry, I don't think this is going to work. We're going to have to talk to Trident or Krasker Law about this. What are you talking about? We all agreed, blah, blah, and they get all angry about it. And I'm not trying to be a bad guy to them. I'm trying to say, hey, this is a problem that we might have to deal with. Let's get it checked out.
Yeah, and there are also other alternatives. So sometimes people call up and say, this is what I want to do, and I'm thinking of doing a quitclaim deed, and I'll either say, I'd prefer you to do the warranty deed for these reasons, or I'll say, look, in your circumstance, maybe we need to do a life estate deed instead. Or maybe we need to do a trust for your family.
Right.
And so, the trust is more expensive, but the other one's still $450.
Yeah.
Spend the money and do it right. And
So-
I had somebody call up the other day. They had the other month now, but they had called me a year earlier, asked questions about moving forward. Some people try to do it on their own.
Mhm.
You get the free legal advice and then want to do it on their own. And they certainly save $450, but they just got a notice from the Department of Revenue that they're being audited and that the deed was done incorrectly. And they didn't tell the Department of Revenue that there was a mortgage on the property. The Department of Revenue found out. And even though they said that they were doing it for estate planning purposes and there was no documentary stamp tax due, there was $3,000 and they had to pay interest and penalties because they'd done it wrong.
Yeah, but they saved $450.
Yeah.
Perspective.
Which was just about their expense on the interest and penalties, which was odd.
And they get to deal with attorneys and government agencies too.
Oh,
they get the extra bonus, right? Of doing all of
and
that.
all the stress. Too.
Yeah,
That's
and
a
all
bonus.
the stress. You
So,
get the stress too. So you get a lot of value for that.
Extra.
That money.
Get
Yeah.
extra. Yeah.
Don't do that, guys. Just give us a call. One of the resources we have is the law office of Paola Krasker. He will, unlike the attorney we had on, which was awesome, Andrew Weimer, he was the construction lawyer. Andrew charges consultation fees up front all the time. Paul, almost every time, right? Paul, you're going to do a free consultation?
Every time. Yeah.
Every time we'll get free consultation with one of the best real estate attorneys in the area. So don't.
And there's a big difference between construction litigator.
Oh
and
yeah,
my
yeah.
practice.
I'm not complaining about Andrew. He's awesome.
They need to charge that fee because somebody's got a problem, and if they
big problems usually.
Yeah.
And
if
complex.
if they're not willing to pay that fee up front, he doesn't want them as a client.
Yeah, exactly. And I'm not. I didn't mean to say anything
Nothing
bad about
negative,
Andrew
no.
at all.
Yeah.
No, he's awesome. In fact, he's doing, I think, better with the short. I think he's put out a whole bunch of clips from the show, which I haven't done yet. So I feel
very
bad.
cool.
So Magali, I hope that helped you out with the questions. You just got great advice from the law office of Paola Krasker. So that's awesome. Anybody that wants to get in touch with Paul, you could always give us a call. I would prefer you do that because I usually coach you on what you need to get the best results when you call Paul's office. I'll say, hey, you're going to need this document or that document, or you should know this, because Paul's not going to give you 5 free consultations, right? He wants you to get the free consultation, get the plan, and then decide what you want to do. But that's why I try to set you up to have the best consultation possible by telling you stuff that you should have with you. So Magali, if you need anything like that or anybody else out there, please give us a call.
FloridaTalkRealEstate.com. That's right. And you're on Facebook there. You know, you got that .com as well. Know it, use it, love it, share it. Of course, if you'd like to join the program, if you have a question, you can join the radio show. Toll free 877-927-6969. Plenty of time remaining on a Saturday. If you're not comfortable on the radio, I get it. Remember, FloridaTalkRealEstate.com.
Well, I want to switch over to Ross. Thank you for being so patient. You're too quiet, Ross.
The stuff you talk about is above my pay grade.
No, I don't think so. So it was so nice when you sent that. I don't know if it was a text or email earlier this week, but I did feel like it was 2014 through 2016 again. I'm like, yes, we got some good news. So the text or email was, hey, I just did a insurance check on somebody. Do you mind if I give the real numbers?
Oh, no.
Because we're not saying the person. So they went from $1,400 a year for the insurance. So I'm assuming.
No. But no, you had texted me, hey, can you be on the show? And I was like, yeah. And just coincidentally, I'd sent we'd just done a quote for a 2025 new construction in Port St. Lucie. And I think our premier quote was $1,400.
Oh,
and
that's what,
our budget quote was $1,000.
For brand new construction. How many? It wasn't a tiny house, right? It was like an average size home.
Yeah. Just probably in tradition somewhere. Port St. Lucie.
Which just shows you what the difference is on new construction.
But the gap between premier and budget was $400. That's just,
not only that, $1,400 for a premier quote.
Give me the premiere, please.
Yeah, exactly.
Oh yeah. That's phenomenal.
But that's kind of what you're experiencing with the new construction, right?
Sure. Yeah, absolutely. We saved a lot of money from our old, but again, a big difference between a 50-year-old home to, a brand new one.
Home.
So, obviously that makes a big difference too.
But your 50-year-old home was half the size of your new home, and the insurance was about half of what you were paying for the old home. The new home insurance was half of what you paid for the old home,
big time.
which is pretty amazing. So that new construction, that's another way for people, affordability wise, if they're being pushed out because their mortgage payment's too high. If they can slide into a new construction home, that can save you probably $150, $200 a month on your mortgage payment compared to a resale, with both houses being equal. $100 a month, every 5,000 comes out to $35 a month on your mortgage payment. So if you're at $100 savings, right? What does that come out to? 20 times 35? That's like a $600 payment savings.
$700?
Yeah, something like that.
Oh no, 70?
I don't know
maybe,
what you guys are talking about.
I think that might be. I'm not going to do the math because I think I got it wrong.
$700.
But it's a lot of savings. You're saving a lot of money. So, Ross, is it a good time right now to double check your insurance policy to see if you can get a cheaper policy at any time of the year? Because at one point we were just telling people we don't care when your insurance policy ends. Check your insurance now because you're probably going to get a discount. I don't think we're completely there yet, but is it worth checking for everybody?
I mean, I would say just check. But I mean, right now, if you have citizens or you were depopulated by citizens and your roof is still, 15 years or older, you're probably not going to find anything different than citizens or your depopulated carrier. If your home is going to be in the 90s and newer with a newer roof, you may have some different options. Yeah, absolutely.
You know who we need to call? Scott, because he put a new roof. Oh no, he had the new roof. I was thinking this guy in Wellington. He did a renovation, but the roof was already on. I was thinking he should call back.
Yeah, but if you have a newer roof and your home is in the in the 90s or newer with a newer roof, you probably have some shopping options available. You're gonna have some carriers that are going to be competitive.
No, let me tell you how this whole thing works. It's so simple. Ross is one of the easiest ways to get your answers because all you do is you reach out to us at floridatalkrealestate.com. You give us your address. I send that over to Ross with your information so that you and Ross can talk directly. Ross will do all the research with his staff. Usually the same day, he gives you 2 quotes. One's called the premier quote, the $1,400 quote in this example, and then the discount quote, $1,000 a month, a year. Could you explain the difference between premier and discount?
Yeah, I mean the difference between the premier and the budget quote, the house itself is covered exactly the same coverages, same fire, theft, hurricane. The only thing that we do on our budget quote is we reduce the personal property, which is your stuff. You take your house, turn it upside down. Everything that falls out of it is going to be your stuff. That's going to be personal property. We just kind of reduce that number. Maybe people don't have a lot of stuff or don't care about their stuff. They just care about the house. And then we increase the all other peril deductible from $1,000 to $2,500. And we can go higher if we want, but we don't want to. We're still trying to provide coverage,
right?
And make sure people's policies will respond, or the deductibles are okay. We just don't throw out a 5% hurricane deductible. On a $400,000 house, that's $20,000 in a deductible. So, if we need to, we need to save some money, we can do that, but that's not where we start.
If you're a responsible consumer and you have that nut sitting there and you're like, hey, I'm good if worst case scenario happens, I want to save money as much as I can. That's one thing.
Yeah, but mostly you see people go, well, on a $400,000 dwelling coverage, most people, you see people go, well, what, if it's a 2% deductible, that means it's 2% of 400,000. So your deductible's $8,000 in the event of a hurricane. People will ask, well, what is it if I go to 5%? And, it might be like $200, $300, but you're taking your deductible from $8,000 to $20,000,
just like that.
Yep. And some people will just send quotes out. Like, pay attention to your deductibles when you're getting quotes.
Yep.
Pay attention because some people will just send out something with 5%, and you don't know that until August when we get hit with a storm.
Well, yeah, because you have to compare apples to apples. It's not all policies are the same.
Yeah, I mean, when I send out a quote, I actually highlight the
variances,
the difference between the 2 quotes that I'm explaining in my email. I highlight it, and I still have people that will send me a quote that they got and ask me like what the difference is. I'm pointing out what to look for. But still, most people don't know what to look for. So if you want me to look at it, I will look at it and tell you what it is and if it's good or not, and send you on your way.
Sometimes you might say, that's amazing. You should jump on that.
Jim said it's easy to get a quote from us. We send out 2. We real quick, we started to kind of ask for, hey, can you send us your declarations page? Because I don't want to send you a quote that looks better and you go, hey, man, I want to move forward. And then I say, okay, hey, I need proof of coverage in order to finalize this. And then you send it to me, and you've got amazing coverage. And the one that you want from me is our budget quote. I don't want to do that. Like, I want to
talk to them about it.
Yeah. So in an effort to kind of save time a little bit, like I'll reach out real quick and say, make a phone call. Hey, do you have a deck page or something?
I
like
heard
that
you
that
just
I can
asked
look
somebody
at.
on that, one of our customers.
Yeah, just
recently.
we want to make sure that we give you an apples to apples quote. Is ours better? If it's not, then we don't need to talk.
That's another little tip I just want to give, and then we're going to get into the true thing before the break. We'll take the break, okay? But with the one of the tips that I have is for people that are trying to get a quote, especially through Ross, is he doesn't have any problem with you shopping it around. If you can get someplace and you can get better, he's okay with that. Okay, but one of the things I strongly recommend, and I'm not saying this just to help out Ross, it's to help out you. Just because you have a lower insurance premium does not mean that you have the same coverage or the same stuff. That's what Ross is talking about right now. So you got to compare apples to apples. So Ross will have no problem if he gives you a quote and you have a quote that you find is cheaper. Go back to Ross and say, hey, how come this is cheaper? Not with any kind of anger or anything, just curious. Hey, this people is saying I can do better here. And then Ross can make sure it's apples to apples. And I'm sure that Ross would say, if the other program was better, the other premium was better, he'd say, I go with that one. I've watched him do that before.
Yep.
But to make the call before you make the final decision, don't just go, that's cheaper, I'm grabbing it. Find out why it's cheaper first. Then you can make an informed decision. That's my little soapbox thing right there.
That's well said.
Now, I wanted to ask you about True, TRUE. I don't remember what it stands for, but it's an acronym for an insurance agency.
It's a Tampa-based agency, right?
I think so, yeah. And Johnny sent me the text the same day I saw the article, and the article said that they're asking for a 31% increase in premiums for the homes they cover in Florida. You saw something about that too. Could you give us? Does that really mean anything, or is that kind of a nothing burger right now?
I mean, I don't think it. I mean, that's one carrier,
and that's a request.
Right.
It isn't even that they're going to do it; they're requesting the state for permission to do it.
Yeah, and they're just a tiny participate in the Citizens Depop program.
Okay.
So if it could actually work out in consumers' favors, because Citizens rates are so artificially, not so artificially, but they're artificially low. So if you were depopulated by, or you were, taken over or assumed by True, and they have a huge rate increase, guess what? You go back to Citizens at the cheaper rate.
Oh yeah, because it's so high.
Yeah, because now it's got to be more than 20% higher than Citizens.
Do you think the state would even agree to do that 31% increase?
They have to back it up.
Yeah,
they can't just say like we just
say, hey,
like our executive wants a new jet this year, so we want to increase our rates. They have to be able to back it up, and it's like an application.
Small jet.
It's only an 8-seater.
Yeah.
It's a little tiny jet.
I can't get to Europe on that plane.
Yeah.
Do they have? So I know we're very different than, like, say, California, where they very much cap and regulate how much they can increase over. Do they have in Florida a increased cap?
I don't think so.
No,
I think they do.
Well, I mean, you have to. I mean,
you just have to justify.
I think there's a cap where that you don't have to apply for.
Oh, that's what I'm talking about.
Right.
Yeah.
Like, but I mean, what's the cap? If it's 31, it's. Is it 50%? Because 31% is doable. So I don't think there's because we saw throughout the last 5 years, some carriers were raising their rates 150%.
Right.
Yeah, that's true.
And that all has to be requested through the state and granted. I mean, they can't just do it on their own.
Right.
Right. There's a
regulated.
minimum rate increase that they're allowed to make. It used to be around 5%. I don't know what it is
Without
today.
any permission. They can just do it overnight.
Like a cost of living increase, sort of thing. But
yeah, that's what I meant by the cap.
Yeah,
that's what I was thinking of. Was that?
But not on like, hey, I need to increase it.
Right.
And as long as you can, based on claims that you have outstanding, whatever criteria they have, as long as they can justify your request, then it may just happen for those policyholders.
But also keep in mind, we're now 3 years into the significant changes that were made through the Florida legislature to try to make it more attractive for other insurers to come to Florida and to be competitive with the rates. Now, I don't know if that'll have a significant impact with the climate change and the risk of hurricanes and tornadoes that we're seeing around the country and here. But that this is now the time where that was those benefits, limiting how claims are submitted, limiting the types of claims you can bring, capping some liability. All of these things were supposed to be what the insurance industry wanted to see before they were coming back to Florida. And it really should happen or not happen this year or next year.
I mean, it's happening. I saw, like a month or earlier in the month, one of my carriers just sent out an email that said all our rates are going down by 10% across, like average across the state. I logged into a quote that I had done before that and just logged in and changed the date, and it just tumbled down. Like the numbers up top just tumbled down by $1,000.
Wow.
So we're starting to see,
Great.
The carriers, become more competitive, expand their guidelines a little bit, and offer more, better rates and dip their toe in a little bit to get back in.
So it's not all doom and gloom on the insurance
Yeah,
industry anymore. We're kind of recovering, if you will.
Yeah,
We
right.
went through a bad bout, and now we're coming
and
back.
it's what Ross has laid out for us for a couple of years. Like this is, and as Paul noted, like it's going to take some time. We should see the improvement, and we're seeing it. So it's happening.
Yeah, and like the renewal, talking to somebody, and their renewal, they paid like $2,100 last year, and this year it's $22.
Right.
Yeah, the rough part is just like whether you're gaining weight is probably the best analogy. It goes up really quickly. It comes down a little
Yeah, a
slower.
little slower.
Yeah, it does. Yeah.
Hey, let's go ahead and take a break. On the flip side, I want to try to get through two things on the flip side, because we got Paul here, and it's always a special time when Paul's here. The first thing I want to ask Paul when we come back: are we in the midst or right on the edge of a real estate crash in Florida? This guy would know more than a lot of people because he deals with people that have troubled properties and has dealt with that for so long. The other thing I wanted to ask is could you give us a wrap up of the condo laws and the regulations of everything that's happening with the condo laws? I know we don't have a lot of time, but we're going to do that in 30 minutes or less as soon as we get back.
Okay. All right. Let's get at it. 4-minute break, and we're back at it. Just remember, Florida Talk Real Estate is a .com. You need pros when you're looking to buy a home, sell a home, stuck with a home, you don't know what to do. Anything that touches the world of real estate, believe me, there's people that are good at what they do. There are people that are great at what they do. I would push you to the great side of things. That's why I encourage you to remember, write it down, share FloridaTalkRealEstate.com. FloridaTalkRealEstate.com. We're back in 4 minutes. Florida Talk Real Estate right here. It's Real Radio.
No one gives a big warm hug like us when you need it. Come on, get in here. Tell your smart device to play Real Radio 92.1 on iHeartRadio. What? Here's the latest with weather on Real Radio.
I'm CBS 12 meteorologist Charlotte Carl. We have a hot afternoon underway. Temperatures getting into the upper 80s, lower 90s across the area. Make sure that you are wearing your light-colored, loose-fitting clothing, taking frequent breaks out of the sun, and wearing your sunscreen. Overnight, a very modest cool down, only dropping us down into the lower 70s with showers building around midnight.
This report is sponsored by AutoZone. Get in the zone. Starting stronger starts at AutoZone, where they've got battery solutions in the form of free battery testing, free battery charging, and replacement batteries that fit your needs. That's what makes them America's #1 battery destination. Get in the zone. AutoZone.
Hey, it's your boy Johnny C here, host of Florida Talk Real Estate. They're tops when it comes to helping people buy and sell houses. But Florida Talk Real Estate is so much more than that. For 5 years, I've watched these guys help thousands of our listeners with any real estate need. They couldn't do it without their sponsors, who are experts in their fields. Check it out. Jim DePola, powered by Keller Williams Realty. Their team specializes in helping people sell their house for top dollar, and buyers get great deals on the purchase of their home. That's what they did for me and my family, and I couldn't be happier that I hired them for my real estate transaction. Mike Rao from the mortgage firm is one of our favorite guests on the show, and he is the mortgage guy. Whether you're looking for a refi or a mortgage to purchase a new home, Mike Rao will get you the answers you need. The mortgage firm is licensed to do loans in Florida, Alabama, Tennessee, and Georgia, and they have local offices that cover all of South Florida. So if you're thinking about a refi or a new mortgage, go to the mortgage guy, Mike Rao, and find out what he can do for you. The Mortgage Firm, Inc., NMLS 189233, Florida license MLD 78, equal housing lender. The law office of Paul A. Krasker has been specializing in real estate law for nearly 25 years and has the professional team you need. upside down with your house, Paul's team can help you conduct short sales, loan modifications, even if you're behind on payments. They also help you with foreclosure defense and bankruptcy. They can even help you get a student loan modification and repair your credit to get the score you need. Paul's full service team has helped thousands of our listeners, and they can help you too. Trident Title LLC is the largest privately owned title company in Florida. When you need a title company to complete a refi, home purchase, or sale, Trident Title has got you covered. Not only do they offer competitive pricing, Trident Title has attorneys on staff to make sure if you have bumps in the road declaring title that you can get the job done. Beware, not all title companies in Florida have attorneys on staff. Trident Title does and complies with all the new federal regulations released last year. Ross Komarinetz, owner of Brightway Insurance, has been helping our listeners get great rates on homeowners insurance plans. Haven't checked your homeowners insurance policy in a while? This is a great way to help reduce your monthly mortgage payment. Ross can also help with renters and auto insurance. Ross is only a phone call away and can usually get the answers you need same day.
Call Ross today at 561-425-6228 or drop by his office at 873 Donald Ross Road in Juno Beach.
So now you know why I'm happy to be part of the Florida Talk Real Estate Show, the longest running real estate show in Florida. And all these sponsors are just a phone call or a click away. Just call 888-973-7828. That's 888-973-7828. Or go to floridatalkrealestate.com. That's floridatalkrealestate.com. And don't forget to use the most accurate search engine to find your new home or ask for a free home valuation because floridatalkrealestate.com has you covered. That's floridatalkrealestate.com.
From the Anajar and Levine Accident Attorney Studios.
Have you been in an accident? Call Anajar and Levine Accident Attorneys at 1-800-747-FREE.
That's 1-800-747-3733.
Real Radio 92.1 is WZZR West Palm Beach, an iHeartRadio station.
Make us the #1 preset on your car radio and on the free new and improved iHeartRadio app. Listen for all your music, radio, and podcasts. Free never sounded so good. This is Florida Talk Real Estate with Jim DePola and Johnny C. Got a question for the show? Call us live at 1-877-927-6969.
Very limited time remaining on this Saturday, the 21st of June, but I still got a bit. If you'd like to join us, 877-927-6969. Jimothy will line you up. Won't you, my dude?
I sure will. Good morning.
Good morning, Johnny C. That's me. Ross Komarinetz is right here. He's with Brightway Insurance, Juno Beach. Hello, Ross.
Hello, hello, hello.
And we got Paul Krasker here as well. The law offices of Paul A. Krasker. He's got the name on the sign. Mr. Krasker, hello.
Great to be here.
It feels very formal, doesn't it? Mr. Krasker. Always great to see you, my friend. And, of course, Jamie D is here. He's our fearless leader, the Florida Home Pros team at Keller Williams Innovations. He's been running that top producing team for 13-plus years now. There's Jimmy D. Jim DePola, how you be?
Hey, thank you, Johnny. Happy South Florida, everybody. I'm so happy to have everybody here today. I need to ask Paul a question that people ask me all the time. I want to see if I get a different answer. Paul, are we going through a real estate crash in Florida right now?
I like the plug right before the break. That was one of those things where you keep people listening. I don't think so. My personal opinion. You got to separate the markets into three different markets: high end, middle, low end.
Mm-hmm.
I think the low end is struggling now. Some of the big bulk purchasers are out of the marketplace today. And I think in the middle, the prices may have dropped 5, 10, 15% in some circumstances.
Mm-hmm.
But I don't think we're seeing a tremendous drop off.
And you're not seeing a lot of distress right now, like meaning for pre-foreclosure defenses, foreclosure defenses. Because the reason why I'm asking Paul, everybody that's listening, Paul specializes in foreclosure defense through loan mods and short sales and working with the banks. And you send out mailers all across the country for people, the state, for people that are in trouble to let them know
Mhm.
that you can help them. So you know how many people, because you do a mailing list based on those
The
those
numbers
things.
have stayed
They're
relatively
very
the
similar.
same.
Yeah, and that's what I'm seeing. So here's this is what I'm seeing. So we'll do the wrap up for this show on this thing. We have 62,277 properties for sale on our MLS. That isn't just our area; it's the whole MLS for us. Now, out of that, we only have 182 short sales out of 62,000 properties. There's 182 short sales for sale. And for foreclosures, we have 517, right? So we're at 700 short sales and foreclosures out of 62,000. This is the first time we hit 1%. So a normal foreclosure market is 1 to 3%, according to national statistics. We've been, Paul, at 0.5% or lower for a very long time. But since we started this like October, November, like coming up with a weekly, this is where we're at. I've seen those numbers going up. Now, they're not jumping up like during our crash, but we went from about 300. We went with like 300 foreclosures and short sales up to 700 now. So now we're past the 1 point, but it would have to more than triple where we are right now just to get to an
Above normal.
Above normal.
Yeah.
So we're at the low end of normal.
Yeah, we're at the low end of normal. And do I think it's going up? Yeah, I think it's going to go up. And I think it's some subcategories in there that are going to have some concerns. You mentioned the condo market. There are a lot of people who are struggling right now. Because of the structural integrity reserve study and because of the general obligations to fully fund reserves from this year forward, some people are not going to be able to afford their condominium and are going to have to sell. And as you get too many people putting their properties up for sale, given those parameters, it's going to drop down the price, or it's going to create situations where you've got delinquencies in the building that are higher than expected and create problems for buildings and problems for sellers and buyers.
Yeah, absolutely. Now, so I don't want to talk about the real estate market crash. I just wanted to get it out there just to push it off. I really like to focus more on the condo stuff. So, there were basically a double whammy thing that happened, right, Paul? And tell me if I'm wrong about this. But the way I looked at it, there were two things going on. Number one, because of the Champlain Towers or whatever it was called over in Surfside or Sunny Isles, whatever, I always get confused about it. When that collapsed, they had the structural integrity testing that needed to be done in all these condos, especially if they're 3 stories or higher. And that was a whammy in itself because a lot of them do have deferred maintenance. But then there was also a regulation that they had to have the right amount of reserves for that community. So in case other things popped up in the future. So that's kind of like a double whammy.
Correct.
Right. Now, what I'm wondering is a little silver lining maybe in this dark cloud would be that once we get through all this pain, and if everybody complies with the reserve information, me and Mike have been talking about this behind the scenes, Mike Rao from the mortgage firm. I think that's going to open up the condo market to a lot more people because once those reserves are done the right way, Mike is going to be able to do 5% down, 3.5% down mortgages on those condos that right now are 25 to 30% down payment.
Yeah.
That'll open up a lot of people to get into the condos. And they'll be structurally sound, supposedly, based on the regulations on the other end. Am I wrong about that long-term trend?
No, you're right.
You think that'll
This will eventually be a good thing
Mhm.
for the condo market.
Excuse me.
You'll have people who will have more confidence in the building, knowing that the reserves are there so that as the roof goes, as the deck goes, as the elevator goes, as the plumbing goes, as the AC goes, as the parking deck goes, it will be able to be replaced and you don't have people kicking the can down the road.
That's the key.
One of the reasons why so many people were voting not to fund the reserves and keep the money in their pocket so that they can have it is They didn't have the money and they didn't want to spend the money. But I think it's easier to get the association to vote to redo the roof if the money's sitting there. And it's not going to be a
I
big
think so,
special
too.
assessment.
Yeah, I think that's right.
So and this year, you're not seeing the full brunt of it. It's going to be next year because the reserve study came in at December 31 of last year. Anything before then. So what were people doing? Instead of having their annual meeting in January, like they always did, they just moved it forward a month and had their annual meeting in December when the law wasn't effective. So they could still vote to not fully fund their reserves
For another year.
And frankly,
Keep kicking the can.
frankly,
One last
it
kick.
was a good thing to kick for a
Yeah.
lot of buildings, especially the older ones over 3 stories, because it gave those people a year to sell. If they were going to be in default, if they had the annual meeting in January and the new number came out and they couldn't pay it, they were going to be in default, and then buyers couldn't buy because they couldn't qualify for a mortgage because the building had more defaults than they were allowed to have. So you can't get a Fannie, Freddie, or other type of conventional loan. And that was going to really start snowballing. So they gave people the ability to pay the old reserve number for an additional 12 months. And then next year, knowing it's going up, they've got to sell before the end of next year. What I think you're seeing now, and the volume of transactions is certainly down from where it was in the heyday, especially in the condo market. You've got buyers who think, no, there needs to be a real price adjustment here because the reserve study, because of the reserve requirement. And you've got sellers who say, I'm not selling for that price yet.
Right.
Yeah.
And so there's always a disconnect, and there's always a low volume when buyers and sellers don't agree on what kind of market it is.
Right.
So I think some of the sellers in the condominium buildings are going to have to drop their prices one more time. And I get a lot of emails, e-blasts from realtors, and they're all using the same language: price improvement.
Right.
Instead of price reduction, they say price improvement. Improvement for who? Obviously the buyer. But I see that coming, and I think the good realtors are stepping in and saying, it's time in this submarket. If you want to get rid of this, you've got to differentiate yourself from the other 23 that are for sale in this building. And next year, you're going to pay another $1,000 a month in your reserves. Are you prepared for that? Are you able to do that?
When you noted that kind of, I don't want to call it a trick play, but savvy move about adjusting the meeting to get ahead of your budget to settle in for another year, in that statement, as you made it, I was like, well, the savvy move is then to price that to move now within this year, because you have to. And doing this show every week, it doesn't feel like, and I don't know how prevalent this was for these associations to fall into this world. I'm sure they all tried when they could, but you would think that the condo sales would be going up because they'd just be pricing them to get rid of them. I got to get rid of this. It's not maximizing profits. Of course you want to, but you got to get out from under this because it's coming. That avalanche is coming. You can hear it moving towards you with every day. And I don't think they still didn't find the right footing, the right place in their head when it came to their property and the circumstance. And I feel like they're still not there because we haven't seen the volume tick up like it should.
And one of the things Jim does very well, and I know because I've had clients call me and tell me, is he's honest with people up front.
You have to be.
And he's not going to take a listing that he knows he can't sell.
Yeah.
And unfortunately, what's happening in the condo market today is that you still have some agents who think that it's great to have 20 listings in the MLS that they have no hope of ever selling.
Ever.
Yeah.
And all they're doing is wasting their time, wasting their clients' time, wasting their clients' money because they're paying carry on the property every month that it goes on.
Did you know, you probably know this, Paul, but I know a lot of realtors don't know this, but if you're a licensed realtor, right, and you sign up with the Realtors Association, you have an ethical obligation not to take an overpriced listing. Did you know that?
Yeah, I don't really
You
look
don't
at
care.
those
You don't
ethics
care.
rules for the
But I
Realtors
just think
Association as set in stone.
I know. Well, I'm not a big fan of NAR lately either, but I do think it's important that they have that there because it kind of sets a boundary. But most people don't even care about it, don't even know that that's there. And technically, you're not supposed to take an overpriced listing. If you feel the listing is overpriced, you're supposed to have the conversation with the seller. And if the seller and you don't agree, you're supposed to say, I'm sorry, I can't take your listing. I don't think I'm going to sell it. I'm not going to give you what you want. I've done that many times, but a lot of people don't. They'll just take it as slap it against the wall and hope the spaghetti sticks.
Well, and
that's what they're hoping.
And a lot of them have a clause in their listing agreement that says we'll put it on at this price, but if it doesn't sell, if we
Within
don't have
a certain amount of time,
if we don't have a contract in 60 days, I have your authority today to reduce it to my number and get it sold.
I use that technique sometimes if I want to take the listing, and if they're willing to do that, I might take it. The other thing I do, and I used to not have this form for a while, I'm dusting it off. I have what happens when you overprice your home document.
Mm-hmm.
So in that document, I say, if you overprice your home, this is the things that you expect. You'll get no showings or very little showings. You won't get any offers, blah, blah, blah. And I put that in there so that people know that I'm telling them that I feel that they're overpricing their house. And I have that form in my folder every time now, just in case people, ask for a crazy price. By giving them that form, it makes them pause at least to think, hey, wait a second, this isn't just a number that I want, that I might not get, but this is the effects that will happen if I put my house on the market and it's overpriced. And today, if you put your house on the market and it's overpriced, you're really doing a lot of damage to the property. And it's really hard to determine what's overpriced because the prices are shifting right now.
Right.
There's a couple of neighborhoods where there is one neighborhood where I just did a price drop to undercut everybody else in the neighborhood because that was the smart move. A couple of the other houses, we're pricing them at a lower price. Like I'm taking an expired listing. We're dropping the price 50 grand, right? And we still might be 15,000. They still might sell 15,000 less than that $50,000 drop, right? Because of what's happening in that neighborhood. And that's a Port St. Lucie neighborhood, great community, golf community, no membership fee, right? Has all these amenities. But you could buy new construction right around the corner. You're not getting all the amenities, but you're getting the brand new house with the insurance rate that's going to be $1,400 a year versus, $3,800 to $4,500 a year in this other community. You got to take all that into effect now. New construction, when you're selling resale in today's market, you got to figure out what's going on with new construction around you.
That's part of your competition.
Because now it's part of your competition. It used to be kind of bifurcated. It was funny. For years and years, when people were buying homes, they never talked about new construction. It wasn't something they bring up. They'd always just assume they were going to buy resale, right?
Well, not everybody has the ability to have that timeline.
Yeah.
Right.
Yeah, that's true.
I mean, so it does. It's a little more niche, but now it's a real competitor.
It's super competitive, and what's happening with the builder market, it's crazy what we're seeing. We just had one on Memorial Day weekend where the couple listened to our show. By the way, Michael and Colleen, I'm going to be calling you right out of the show while I'm driving over to the new place. But Mike and Colleen called us. They were YouTube fans, right? They're from New York. And they decided they were going to buy in Orlando, but not until 2026. I was setting them all up to get all that going. Even had an agent go out to their house in New York to find out what it would sell for. They called me up out of the blue and go, hey, we're changing our mind. We hear that developer discounts are so great. We're going to buy now. Got them over with a top agent out in Orlando. They looked at 6 communities in one day. They plunked down money on a deal that they absolutely loved. Check this out. $40,000 below list price, plus $15,000 in bennies for closing costs, down payment assistance, and interest rate drop. Great time to buy a new construction home right now.
Sounds that way.
So if you're resale and you're not competing with them, you're going to get burned right now.
Yep.
And that's just the way it is. Do you have perspective on that, Paul?
Yeah, I think the builders are all looking at it. They don't know what the long-term prognosis is, and they want to reduce their inventory and they want to get their sales moving.
Mm-hmm.
And they'd rather take a smaller profit today than hold out for a big profit come season next year. So
Yeah,
I know in Port St. Lucie, I mean, just a couple of years ago, there was such a high demand that these builders couldn't build them fast enough. And now they're in the opposite, where not as many people are buying and they have all these extra properties. And when they put in a development up there, I mean, in that Tradition area, I mean, they put in thousands of units.
Yeah.
So, I mean, it was just, it's so much in such a short period of time.
Yeah, the market's really changing a lot, and it's changing a lot of different ways. And that's what I love about real estate. It's different every day.
Oh, yeah. And neighborhood to neighborhood.
Yeah, and it's street by street. And
to
now
street.
it's house by house on some neighborhoods.
Yep.
So you really got to understand the market before you go. One of the things that I'm doing is with my buyers, even if they don't want to buy for 3 or 4 months from now, or we find out they can't get the loan right away and Mike has got to work on their credit or something like that, we set them up on the search right now so that they know what's going on in their market, what they're looking for their houses. They can see back on market. They can see price drops. They can see withdrawn and canceled in their neighborhoods that they want to buy in, and the ones that close and the ones that go on market. So that way, after 3 months, if they have 3 or 4 neighborhoods and I've zeroed in on the searches, they can get everything. They know they're as good as me when we get out there. They'll know if the house is a good deal or not, if it's priced right or not, before you even go out there. So you got to make sure that you understand the market now and work with the market, because that's one of the things that we just said on this whole show. Think of all the things that Paul just taught us today, all the changes, the positive changes, mostly positive, that are going on in the insurance market. If you're listening from 6 months ago and you think insurance is just horrible and it's getting worse and worse every day, you're not really keeping up with the times, because that isn't the reality right now. That's your perception of the reality.
Right.
So if you want real stuff, just give us a call and we'll help you any way you want, especially if you have student loan debt. Right? Give us a call, because we haven't had those calls in a while. And we know there's a bunch of people out there that need help.
Oh, absolutely. You mentioned, just quickly, Jim, you mentioned the increase in the short sale and the foreclosures in our MLS.
Mm-hmm.
What's the available properties numbers? Is that going up too? Are we shifting more and more into a seller's or a buyer's market?
We've been flat for the last several weeks. The last several weeks we did that. We've been at 62,000. We haven't gone to 63 yet. Now, when we started doing this in October, we're at like 49,000.
Right.
So we have gone up dramatically since then.
But we've
been staying at 62 now for like 3 or 4 weeks in a row.
I have a bunch of clients who've taken their properties off the market for the summer to put them back on in November.
That might be a part too. That maybe it's slowing down, that people pull them off and say, we're going to take a little breather right now and see what happens. That makes sense.
We were just looking at some properties the other day, and we noted a couple that were just taken off of and maybe reaching out to be like, hey, you still interested?
That's a great little tip. You could reach out to the ones that just went off the market and say, hey, I have a real live buyer for you, not just saying I have a buyer. Or do you still want to sell? That's a good technique in today's market.
It really is. Lots of great information to be had every Saturday, but always remember FloridaTalkRealEstate.com, y'all. That's the one-stop real estate shop. When you need pros, when you're buying a home, selling a home, stuck with a home, you don't know what to do, try to deal with anything that touches the world of real estate, you need some professional guidance. I encourage you, write it down. Know it, use it, love it, share it. It's the one-stop real estate shop, FloridaTalkRealEstate.com. Access to the entire team. Pros. You can call the hotline as well. 24 hours a day, 7 days a week. 888-973-7828. Answered by a live body. You'll find the hotline at FloridaTalkRealEstate.com. We're on Facebook and YouTube as well. Thanks for being with us every Saturday. Was me, Johnny C. There's Jimothy, our producer extraordinaire, of course.
Have a great weekend, gentlemen.
You as well, my friend. Ross Komarinetz with Brightway Insurance, Juno Beach. What are you doing this weekend?
Hanging by fingertips on the cliff.
Oh, perfect. Excellent. I hope you do well.
Tomorrow, I'm actually going to go down to the Keys with my dad for a couple days and hang out with him.
Excellent.
Nice. Tight line.
Have a great time, my friend. Always a pleasure. Good luck at your golf tournament today, Paul Krasker.
Thank you.
And as always, a pleasure to see you.
Great to be seen.
Jimmy D, have a wonderful weekend.
Thank you, everybody. Happy South Florida.
Stick around. We're going to celebrate back-to-back Stanley